Good morning and welcome to the Killik market update. This week, Apple and Samsung have both reported weak numbers in terms of phone sales. And this ties in quite nicely with a chart that we showed a couple of weeks ago, which illustrated that now the majority of people in the world own a smartphone. Here's another chart which shows that in a bit more detail. It shows the number of people by country which have either a mobile phone or a smartphone. So the blue line shows the percentage of people in that country that own a phone, and the green line shows the percentage of people that own a smartphone. So as you can see, there's not a huge amount of further opportunity for these phone manufacturers to sell phones to people who don't already have them. We've still got the upgrade cycle, so people replacing their phones or upgrading their phones, but even that looks set to become less frequent. Remember last year when Apple was quite heavily criticised when it admitted it was slowing down older models of its phones, and it has since said it will no longer be doing this. So perhaps that implies that in future people will be replacing their phones less frequently. Also last year, Apple said that it would no longer be reporting the total number of phones that it had sold each quarter. Instead, it would be reporting the total revenue from phone sales. The reason the company gave was that because it had so many different price points of phones these days, it was no longer relevant to report the total numbers, but a number of analysts were concerned that they were trying to disguise weaker numbers of phone sales. And in fact, this quarter, Apple has said that the total revenue from phone sales was 15% lower than the same quarter last year. And yet again this week, we have been looking at US interest rates and the Federal Reserve. I know we've focused on this quite heavily recently, but it is one thing that is quite strongly moving markets, and we do feel it is quite important to keep a very close eye on it. So this week, the Federal Reserve released a statement which did cause quite a lot of surprise to traders, and it implied that the Federal Reserve would actually be willing to lower interest rates, and in fact go even further than that and engage in even looser monetary policy. Here's the statement from the Federal Reserve. So they said the committee would be prepared to use its full range of tools, including altering the size and composition of its balance sheet, if future economic conditions were to warrant a more accommodative monetary policy than can be achieved solely by reducing the federal funds rate. So that not only implies that they would be willing to reduce interest rates if required, they would be willing to go even further than that. So yes, it was quite surprising, and the Fed was criticised for making a U-turn on its previous interest rate policy, but it did give some comfort to markets that the Fed would be willing to act if required, and we have seen quite a notable rise in stock markets this week. And last of all, there's been lots of focus recently on ethical and sustainable investing. And we feel that investors are becoming increasingly less willing to invest in companies that they don't believe are acting in a moral way. So we've been quite interested recently to see that MPs in the UK have been investigating the fast fashion industry in regard to sustainability. And there are lots of different aspects of this to look at. For example, how these companies are treating their employees, how they're treating their producers, and also the types of fabrics that these companies are using. For example, it's thought that fabrics like organic cotton are much better for the environment than fabrics like polyester, which release chemicals when they're produced, when they're washed, and following that, they're not biodegradable. So that's one thing that these MPs have been looking at. And this week, a report was released by the Environmental Audit Committee. And this looked at different companies within the UK fashion industry. It criticised some for not being very engaged with becoming more sustainable, and it praised others that it believes have been making an effort. So ones that it criticised were Sports Direct, JD Sports and Boohoo, and ones that it praised were ASOS, Marks & Spencer and Burberry. Looking at the week ahead, it's quite a big week for the oil majors, and we have got results coming out from Total and BP, and also we've got results due out from music streaming giant Spotify. That's it from us. Have a great weekend, and we'll see you next Friday.